Fidelity just became the first 401k provider to allow savers to have Bitcoin in their 401k accounts. The change is scheduled to take effect later this year in 2022. (401k) participants will have access through what Fidelity has dubbed a digital asset account. Initially, it will just offer Bitcoin. Other digital assets are expected to be added later. Hallelujah. This Fidelity move is huge. They are one of the nation's largest 401k providers. Fidelity is a big player in a big pond when it comes to 401k assets under management. Fidelity's 401k assets were estimated at $2.4 trillion in 2020. This tidy sum amounts to over 1/3 the entire market. There will be fees, of course. Early indications are that the fees could range from 0.75% to 0.90%. Guess who was the first to get in line for the new offering? You guessed it, MicroStrategy CEO Michael Saylor has already signed up for the plan for his employees. This is only apropos, as Saylor is only one of the biggest proponents and thought leaders for the adoption of Bitcoin. As the most pristine asset in the world, Saylor refers to it as the apex predator, which Saylor often likens to digital property, digital money, and digital energy. Why did Fidelity do it? Because their customers want it. That also speaks to the adoption of Bitcoin. People want it. People want access to it. They want to invest in it. They want to preserve their wealth using Bitcoin. Fidelity's head of workplace retirement offerings and platforms, Dave Gray, was quoted as saying, "We have been developing this, anticipating some of the workforce trends that we see coming." Gray also added, "Our clients expect us to be ahead in developing innovative solutions." This move by Fidelity has the potential to open up Bitcoin and other crypto assets to trillions of dollars of investment. By the end of 2021, there were about $35 trillion in retirement accounts in the US. Until now, nearly all that money could not be used to purchase Bitcoin. Aside from a few self-directed IRA providers like iTrust Capital, Equity Trust, and Bitcoin IRA that allows you to invest in crypto via an IRA, digital assets have been strictly off limits to retirement savers. Although many 401k participants would love to do just that with a portion of their retirement savings. That is, allocate some of those trillions to digital assets like Bitcoin and other cryptocurrencies. Because most investors cannot purchase crypto in their retirement accounts, most all of that $35 trillion has been off limits to Bitcoin. With this Fidelity move, that glass ceiling is shattering. Yes, regulators are still cautious about the idea of allowing savers to have cryptocurrencies in their retirement accounts. We all continue to wait for more guidance from the regulators. Volatility is still a concern, as well as the need for the industry to mature in how it custodies crypto assets and maintains records. And the fear of fraudulent use, scam artists, and rug pulls will never go away. Fidelity has said that they will ensure institutional grade security of the digital assets by holding the Bitcoin on their custody platform. Adoption news like this is why I invest in Bitcoin. It is a long-term investment asset that is here to stay. I don't watch the day-to-day prices like 90% of investors. I only watch the rate at which Bitcoin is being adopted to tell me that this is a good long-term investment. Unless you live on another planet, you know that Bitcoin is being adopted everywhere by everyone, retail and institutional investors alike. Even nation states like El Salvador and more recently the Central African Republic have adopted Bitcoin as legal tender. There are also territories like Prospera off the northern coast of Honduras and Madeira and an autonomous region in Portugal that are adopting Bitcoin as legal tender. The only thing I need to know about Bitcoin's price is the following. Since Bitcoin's inception in 2009, it has been the best performing asset, hands down. Look at any chart and stack up Bitcoin against those other traditional assets like gold, silver, cash, S&P 500, NASDAQ, Amazon, or Tesla. You will see what I see. Bitcoin is the best performing asset. I am a long-term investor, and 2009 is a long enough track record for me. Not to mention how Bitcoin is also a deflationary asset. We will all look back on these seminal events in 5, 10, 20 years when Bitcoin has experienced mass adoption and it is universally accepted, and the price is well into the hundreds of thousands, if not millions of dollars. And some will wonder what happened. Where was I? Why didn't I participate? Why didn't I buy in early? Is it too late? These actions by retailers, institutions, multinational companies, and nation states are the literal breadcrumbs that are being laid down right before your very eyes in real time. These breadcrumbs are all leading us to an inevitable future of mass adoption, acceptance, and financial freedom that we all long for. A future where your money is worth something. A future where your money is money and has value. A future where your lifetime of savings has not been eroded by inflation and money printing and unbridled government spending. A future where your assets has guaranteed you a comfortable retirement and left you something to pass on to your heirs. Fidelity is only the first. There are more money managers coming who will follow in their footsteps. Accounting rules and regulatory uncertainties have been holding these financial institutions back. But every day, those hurdles get lower and lower. Save this post, because years from now, you will reread posts like this. At that time, the history of adoption will be more evident to the uninitiated. Dare I say, it will be obvious. On some distant date in the future, it will be so evident that you will wonder, where was I? Why didn't I see this? Why did I ignore this? Why didn't I participate? Why didn't I invest just a little in the beginning? Is it too late? These are the questions that regretful investors always ask about the big, high-flying transformational companies like Google, Apple, Tesla, and Microsoft, years after they have missed the ride and the companies have matured. Pay attention to what is happening with digital assets so that you are not asking those same questions about Bitcoin years from now. Disappointed you missed the ride.